Hey guys, welcome back. In today's video, we are talking about the AMC dark pool, zero shorts liquidity, the fake share price, and many more in this video. First, we can look at this. AMC dark pool alert, 72% off exchange trading. Over 1.46 million shares routed off exchange today, making up 72% of total volume. NYSE only saw 10% of the action. The translation: market maker and hedge funds are playing in the shadows, keeping retail in the dark. They are hiding price discovery, suppressing real demand, and stalling for time. But with liquidity drying up, how much longer can they keep this up? So this is something that we've always been talking about, and it's extremely important to highlight what this is doing to AMC. And firstly, when we understand that over 72% of the trades being the dark pool, for those of you who don't know, when the trade is in the dark pool, obviously doesn't have any effect because it doesn't hit the lit exchange. So even if millions of people were buying AMC, but because it's rotated in the dark pool, it wouldn't actually increase the price of AMC. However, if, for example, over 1 million buys have come in for AMC, but it's in the dark pool for longs, but just one singular short order has come in for AMC based on the lit exchange, that could actually drive the price down. And so this is what we've talked about with how never have we seen real price discovery when we're seeing over 72% of the trades being routed in the dark pool. And most times than not, what we have seen is that there are more buy orders than sell orders. So like we talked about, they are hiding price discovery, they're suppressing real demand, and they're stalling for time. Because when you are suppressing demand, when you are suppressing price, it obviously doesn't attract people to buy in, and that's obviously what they want. They want to remove any sort of bullish pressure they can for AMC, especially with what's happening recently. When we take a look at this, you can see, firstly, movies are back on a massive scale. While short hedge funds bet heavily on AMC's demise back in 2019/20, general market data suggests those bets are backed by securities in the inflated market about to turn deeply red. Might be time to bring out that popcorn. What you can see is just essentially seeing the collaterals. Now, what we have to understand is that one of the things we knew with how the short sellers were able to over leverage on their positions on AMC was because they took a large amount of collaterals, they took a large amount of loans. One of the things we first talked about was obviously the reverse repo. And you can firstly see that the reverse repo is under $100 billion. What we're seeing as 97. Now, this was one of the easiest ways for these institutions to get easy access to liquidity. It was one of the things that allowed them to finance their short positions. At the peak, obviously, the reverse repo reached $2 trillion. We're now seeing it at 97. And what we've also seen is the decreasing liquidity. So you can obviously see the relationship between the two. But another thing is also talking about, and you guys can see here, securities collaterals. One of the things they've done was they used other stocks as a way of collaterals. And one of the stocks we've talked about in the past was obviously Nvidia. And you can see how the price and value of Nvidia has increased drastically in the last few years. And so has the collateral value. And this is one of the reasons they were able to prolong this whole process. But now what's coming up? It's obviously the decline of the collaterals. We're seeing the decline of Nvidia. We're seeing the decline of the reverse repo, and we're going to be seeing the decline in the overall general stock market. And with that being said, what we obviously understand here now is that when all of these things come crashing down, when all of these things fall in value, so will their collaterals, so will the money they put up for margin in the past to obviously finance their short positions. So you can obviously see how this isn't going to turn out well for them. Another thing you can see, ignore the fake AMC share price. It's being walked down on no bad company news. Have confidence, the box office is doing well, and AMC branded popcorn is flying off store shelves. The share price we see is not reality. Short sellers will eventually capitulate. And this is something that, again, we've already been covering in our past videos, but you can already see from today's video in terms of what we talked about with in terms of what we talked about with the collaterals falling down, wherever it's securities collaterals, whether it's the reverse repo. These are all signs showing how they were able to gain access to a larger amount of money, which they shouldn't be able to then use it on AMC along with other things like dark pool to obviously suppress the price. So we obviously know that the price of AMC is not a true reflection of what the value should be. Another thing is AMC market cap now at 2019 levels. When movie industry considered dead, since then AMC survived a pandemic and an actor strike, optimized OPEX, got debt under control, and is expecting a net positive 2025 with movie titles slated for success. How would you act if short in AMC? And what we've talked about already was talking about how the fundamentals of the shorts are failing. And we talked about how AMC is doing well. And this is exactly what we're seeing. Firstly, you have to understand is that we are in a price where this was only reflected when AMC had to shut down their theaters due to COVID-19. So we are at the same price when AMC couldn't actually operate as a company. So then already from that, you can see how we are not reflecting a true value, a true price of what AMC is worth. Because how can AMC be worth the same as when it wasn't operating, especially with everything we have going on? Remember that AMC's fundamentals have only increased since then. AMC has increased and improved the revenue streams. So, realistically speaking, AMC should be at least worth above that price and not the same. And so obviously we know that that is because of the suppression. Another thing is you can see that shorting hedge funds are getting desperate. XRT equally weights 80 companies in the ETF. It's being shorted to annual lows to suppress AMC, which is only 1 to 2% of the entire ETF. Manipulated the entire ETF basket to attack one stock. Now, this is something that we've discovered and seen in the past. It's something that we've discussed in the past. And essentially, you have to understand is that there have been multiple methods being used by these firms to suppress AMC. And what we're seeing right now is how they're increasing their, in terms of usage with this. And now we're going to be seeing how it's going to become difficult for them, because like I said, one of the biggest factors is that their liquidity, is that their capital is falling. And with that being taken into consideration, we'll know that it's struggling. It's becoming harder and harder for them to suppress AMC, when eventually they will obviously have to give up. Another thing is, holding AMC on the way down was the easiest part. I believe A, there's a threshold in terms of price, time, etc., beyond which shorts are forced to close their positions. B, CEO Adam and partners have secured a path beyond that threshold. Then the job to hodl is ours. Now, this is obviously very simple to understand, and this is something that we've already talked about in this video. Now, the threshold is obviously referring to, in my opinion, in terms of when obviously shorts will no longer be able to hold onto their short positions. Now, the threshold for this is very simple: when they run out of liquidity, and that's the whole focus we've been talking about. And that time is becoming soon. Like we talked about, the liquidities, the collaterals, these are all failing, these are all falling, and we are seeing that happen in real time. And so the threshold for them to actually close their positions is becoming closer and closer. The next thing is obviously talking about how CEO Adam has secured a path beyond that threshold, and that's obviously with the fundamentals, and that's something that we have seen. And if you want to take even a closer look, the domestic box office Q1 2025 is now above 600 million. This is bullish for AMC. Rising box office, shrinking debt, more revenue streams, lower cost basis, more A-list members, more PLF screens, higher merch sales. AMC is going to make big profits soon. I like the stock. Now, whilst the box office isn't something that Adam Aaron can control himself, it is something that's obviously relating with AMC. What we know is that the bigger the box office is, obviously the more money AMC will make. And that's because of multiple different revenue streams that they obviously take from that. One of the biggest things that we have to understand, and this is something that I always highlighted, is understanding that Adam Aaron had said that they are able to make the same profit, if not more, with an even lower box office, because their profit margins has obviously increased. So we have to understand is that they're able to survive when the box office is low. They're able to make more profits now than before when the box office is low. Just imagine what will happen now that the box office is actually increasing and getting even bigger. Our profit margin is improving, the box office is increasing. That is only going to mean more profits for AMC. And you can see how other firms are obviously relating to this. Roth MKM upgrades AMC Entertainment Holdings. Now, when I look at these in terms of the ratings, the analyst for AMC, I take it with a huge pinch of salt. The reason why I say this is because they obviously use these to manipulate the price. One of the biggest things that what I do pay attention to is obviously seeing if institutions are buying AMC. And that's something we have seen. We have seen the institutional ownership increase for AMC, and that itself is the biggest confirmation for me. And you guys, thanks for watching this video. I'll catch you guys next time.